let's get it started, everyone. So welcome everyone. So as I was talking, election has ended on USA and has Trump win. Trump has win, the elections. So we're gonna be reviewing the election on a historical perspective, on market reactions. Okay, because in 2020 elections, we saw some huge volatilities. The market was very sensitive to any sort of data that was coming out as well. So we're going to be doing, just a chat, very casual chat today. Nothing too crazy. Second topic will be the impact on the US dollar after Trump win, key sectors and policies. All right, so pretty much, as we all know, US dollar gets very strong on Trump with Trump on power. Therefore, what's going to be the sectors and how is going to be the policies that Trump may be looking to implement, right? Third, Fed policy predictions post-election. So from now on, we have Trump on power. Therefore, most likely we're going to be having some different sort of monetary policy, right? And what are the potential moves with the new Fed policy predictions? And fourth but not last, analyzing post-election portfolio rebalancing. What are the major movers that can, get us on board with some good trades for this pretty much full month of November and the full month of December, finishing up the last quarter very strong. Okay, so get your notebooks, get your pens, get some notes, because that's going to be a really nice webinar. So before we go any further, I would just like to put the disclaimer here so everyone can read before we go anywhere. All right, let's go. Hopefully everyone could read it. Okay, first topic, reviewing the election. So 295 electoral votes for Donald Trump. Okay, Donald Trump is the next president of the United States. He racked up victories in his slate of swing states from Rust Belt to the Sun Belt to clinch enough electoral votes needed to win, even with some states left uncalled. I shared yesterday on a website that I was using. Let me just close my Teams first before we go any further. Perfect. I've shared it on a website yesterday, but this one is another one, political. We'll send these on the chat so everyone can follow. Political. There you go. It's on the chat. Everyone can have a look on it. But one thing I want to talk is, if we look at the past elections and how they have influenced the market, historically, election year, the whole year of the election tends to introduce a fair amount of volatility as the market reacts to uncertainty, right? And potential policy shifts. And now it gets me thinking, we saw gold prices rallying since the beginning of this year, since January of this year, right? So if we actually pull up gold prices here on FinLogix, I will share FinLogix website with everyone. FinLogix. It's very easy to access FinLogix as well, guys. You can just come to Google and type finlogix.com, type enter, and you're gonna get in there, and then you can click in chart. So let's have a look on gold. Perfect. So if we take on a daily time frame, we can see that since beginning of this year, we haven't had pretty much any moves except up, right? So from here, from this vertical line right there, all the way to now, as I see, it's uncertainty to the market. So when it's an election years, it's going to be exactly the same if you go to 2020, all right? 2022, 2021, 2020, right here. right here. So we can see that it tends to be very, very strong to the upside. You know, of course, later on we have some pullback, but still, this is representing to me, this is clearly showing one thing to me, okay? It's very volatile because the market reacts to uncertainty and potential policy shifts, all right? So, for example, during the 2020 election, we saw market sensitivity to the market was very sensitive to economic stimulus expectations and healthcare reforms, you know, tax cuts and et cetera, which directly impacted the US dollar. And when the US dollar is weak, majority of the portfolios around the planet are moving to commodities and to safe havens like gold. Okay, as we see, gold has been since 2024, gold has been up all the way from 2000, pretty much $2,000. Let's call it a $2,000 to make it easier, all the way to the top of $2,790. All right, so let's say $800 of increase on the prices. That's pretty good. I'm not gonna you know, if my portfolio gets that sort of return every year, I'm not gonna complain. So this is the type of volatility that can appear into the market in terms of historical, if we look at the historic perspective on the market reactions. Okay, so typically in the months leading up to the election, like October and as well September, so September, October, and then November, the US dollar can become a bit more volatile. And we saw that, as we can see right here. Okay, we saw very directional this year. Okay, someone just wrote on my screen. Let me just take all of the writing. There we go, perfect. So, and we saw the US dollar very directional, not much actual, you know, not much volatility, not going ups and downs, and more like a directional approach. But we saw from the month of October, since the month of October, all the way to November, and then to the election day, we saw a very directional approach on the US dollar. From October to November, we had pretty much 4% of up move. All right. Before that, we were trading on a consolidation, as we can see, a consolidation of around 2% from the top to the bottom. But typically, as I say, in the months leading up to an election, US dollar is the one, of course, from, you know, from USA. US dollar will be become a bit more volatile as investors, they're trying to price in potential policy changes, monetary policy changes. Okay, so this year we've seen a very similar pattern, as we can see, the US dollar fluctuating as the pools was shifting, and the biggest thing that was driving the US dollar up this year, that was very new, I would say, because 2020 we haven't had that same sort of sense of strong betting on presidential elections, and you know, if Trump do this, if Trump says that, and etc. etc. So wow, that's really slow. There we go, perfect. So we can see that from the month of August, okay, Trump was ahead at 60%, Kamala Harris was at 41. And then from the start of September all the way to October, we can pretty much see there's nothing changing here, okay? Nothing changing. And the market was like, okay, I'm not going to be trading long, and I'm going to be trading short. And we can actually see on the US dollar index that has been exactly the same as on the Poly Market website, okay? I'm going to share Poly Market website with everyone, or market. It's on the chat as well, so everyone can have access to this window. But what I was trying to say is, it was fluctuating as the pools. Okay, if Trump was in front, then US dollar was stronger. If Harris was in front, then US dollar was weak. But it wasn't like that in 2020, let's say, or 2016. It was a bit different, right? Because if we come back to here very quick, so from the month of few days after starting August all the way to the start of October, we can see that it's exactly pretty much the same. Okay, so from August, somewhere around August here to the start of October, we've seen some consolidation. And then once Trump got the lead into the pool, then yes, we saw a very directional move into the US dollar. Okay, it's interesting. It's very interesting. And another thing is we have to note down that regardless of the party in power, certain sectors like defense or green energy, often they will experience similar cycles. Okay, so today we're going to be discussing on how those cyclical trends could repeat based on historical data, as well as offering some insight into how the investors maybe respond to post-election and how the change on the portfolio can possibly happen from now on with the shift of the monetary policy from the Fed. Okay, so that's pretty much the first thing I want to review with everyone, like the election as a historical perspective on the market reaction that we had on 2020 and then we had to now. It was pretty different. Okay, it was pretty different because, as I was saying, the culture of like a betting website on poly markets, let's say, it was different, was totally different from what it is now. And we, there was other factors as well in on the input of volatility, like the COVID, okay, like COVID, like war, gold price, sorry, oil prices, and etc. So it was a different time. We can't take as a exactly same period. Um, does anyone have any questions around that topic, or can we move on to the next topic? Okay, no questions. Hey, sweet, how you doing, man? Team Peter, Wilson, Zodwa, welcome, guys. Okay, so what's the impact on the US dollar after Trump win, and what are the key sector policies? Okay, so with Trump winning, we can continue to expect a very specific impact on the US dollar. Okay, so especially in areas like energy, manufacturing, and trade. Right, those are I think those three would be the biggest. Let me type it down here so everyone can note it down as well. So energy, manufacturing, and trade. Okay. These are the areas that I think it will be most likely impacted. Okay. Historically, the Trump policy have leaned towards protectionism. Okay, and it aims to boost domestic manufacturing and reduce reliance on foreign goods. So this is why everyone thinks that USA will stop importing. Okay, stop will taking things from like Australia, for instance, or China, that it's a big importing from US, and they will most likely try to do. Trump prefers that. I don't think this is wrong. I think as a USA, as a huge country as it is, you can't be. Of course, there is a point. Okay, I'm not talking about 100%, but you need to be your sort of domestic manufacturing, and you have to reduce your reliance on the foreign goods of all the countries. You have to be able to produce your own. You have to boost your own domestic manufacturing. I do believe on that. Okay, and this is good for USA. Okay, because investors will be looking to. Okay, that's a time where economy will expand itself, and we need a more looser monetary policy. So then we can borrow more money from the banks and pay less, and therefore make more the labor market increase, more jobs number we get on the sector, and etc. etc. So it's a very another topic that Donald Trump really is on focus is the tariffs, all the trade restrictions that could leave in some shifts on the US dollar. So particularly against currencies like the Chinese one, the euro, and they're going to be very heavily influenced by US trade policy from now on. So, for instance, Tariffs or trade tensions can strengthen the US dollar in the short term, as we saw just this week. Okay, we can see right here in front of me, I have the XY open. Soon as they started to count down the votes, we had this gap of around 0.24%. And then from there, we had a up move to 1.7%. So this will probably can strengthen the US dollar, because people already understand that if they get into only in the boat, they will pay cheaper. Then afterwards, the US dollar is going to be so high expensive, right? So in the short term, this will strengthen the US dollar and then make imports more expensive. Therefore, which, you know, will raise the dollar value. So let's say you're a country that wants to buy something from USA. Let's say I'm in Australia and, you know, I work for the government, and they ask me to buy something from USA. All right, that's not a problem. Maybe 6-7 months ago, it was much cheaper, okay, to buy something out from USA, because the monetary, the tariffs and the trade tensions were much lower than it is right now, and Trump wasn't even on power. Okay, so therefore, for me to buy something from USA would cost me 1.25, let's say, and now it's costing me pretty much $2. All right, so it's not funny how bad this can be for some countries. Okay, so because this will raise the dollar value, therefore it's going to be much more expensive for other countries to buy. However, I do think that over the long term, they can also wait on down economic growth, especially if countries implement counter tariffs. Okay, we'll talk more about these sort of different scenarios and how trades, you know, how we traders can use this understanding to prepare for a policy driving US dollar movements, or how this can potentially drive a change on the monetary policy from the USA. Does anyone have any questions on this second topic? No questions? Okay, all good. All right, so that was the second part. So impact on the US dollar after a Trump win, and these are the key sectors and policies that we may be looking. Okay, as I say on the chat: energy, manufacturing, and trade, and then later on, tariffs or trade tensions, making the dollar more expensive for other countries to import from the USA. Right now, I think that's where we're going to spend a little bit more time talking about, and that's the third topic. All right, that's the Fed policy predictions from post-election, and what are the potential moves that can possibly happen at the FOMC. So, it's a pretty good topic to talk about the Federal Reserve, and how we can and how the decision post elections will shape the US dollar trajectory. The Fed mandate revolves around maximizing employment and controlling inflation. Okay, that's the dual mandate, as they always say. Satish asked the question: how long the US dollar strength will last? It's a pretty good question, Satish. I do believe that for quite a long time at the moment, okay, quite a long time, we can potentially see a pullback, but nothing major, because most likely the levels that traders are continue to pushing, it's going to be 105, 800 to 106 on the US dollar index. So we will probably continue to see US dollar strengthening against, as I was saying, against euro, against the Canadian dollar, against the Japanese yen, against the Chinese one. So those are the against Mexico peso as well. Okay, so these are the ones I think will be very potentially potentially able to be trading from now on. So hopefully I answered your question, Satish. Now, so the Fed mandate, as I was saying, it pretty much it revolves around two things. Okay, maximizing employment and controlling inflation. And any significant change in government spending or taxation policies often forces the Fed to adjust its approach. Okay. So they say, because RBA is not dovish, but Fed is dovish. Yeah, RBA can be dovish, but Fed can be dovish if they want, because inflation is much lower than actually USA. So that's completely fine. RBA, Reserve Bank of Australia, has the right to be dovish. Okay. Sorry, has not that as doesn't have the right to be dovish, but the Fed has the right to be dovish. Okay. So US dollar will continue to be stronger against Australian dollar. All right. So being dovish means very loose on the monetary policy. Being hawkish, it's the opposite of dovish. It means to be very strong, very tight monetary policy. So when a hawkish central bank, when we have a hawkish central bank, most likely we will have a stronger currency. And when we have a dovish central bank, we're going to have a weaker currency. Okay. Now, again, continue. So when we have a change in the government, like any significant changes, not like minor changes, like a very significant change, like Donald Trump is the new president of the USA, that's a very significant change. Most likely we will have a change on the this will be forcing the spending or taxation policies that will force the Fed to adjust its approach towards the monetary policy. So for instance, if Trump administration pushes a substantial fiscal stimulus, it could lead to inflationary pressures, prompting the Fed to consider raising interest rates sooner than expected, or continue to cut sooner than expected. But in a sense, most likely we will see not a cut, not a raise on the not a raise on the monetary policy, but most likely continuing to pause. So holding that monetary policy for longer than what was expected. That's most likely what's going to happen, and that's another another point of the Fed. What can happen? What can happen post elections? When Trump gets in power, he's going to be with a new administration, and this will push for fiscal stimulus, and this can lead to more inflationary pressures. And with inflationary pressures, this will need the Fed to consider to maintain the rate higher for longer, because as we know, the inflation has been coming lower from USA. So if we look at USA inflation at this moment, we know that it's around 2.4% in September. Let's have a look. Yeah, 2.4%. Previous 2.4%, coming all the way up from, let's say, 5 years, all the way up from June 2022 of 9.1%. So we were having inflation at 9.1% in June 2022. And right now we have inflation at 2.4. And we all know the target range of inflation for Fed. It's around 1 to 2%. Okay. So what is the Fed's inflation target? The Federal Reserve seeks to achieve inflation at the rate of 2% over the longer run, as measured by the annual change in the price index for personal consumption expenditures, the PCE. The PCE is the favorite measure of the Fed. Okay, CPI, yes, of course, CPI is good measure, but PCE is the favorite measure for the Fed. Now, As I was saying, forgot to open a website CME. Let me just open for everyone. Here you go. It takes some time to load, guys. There we go. Let me just send these on the chat. Oh, interesting. Oops, sorry. I don't know if you guys remember, but yesterday it was completely opposite. Let's have a look on it. Done. Okay, I sent it on the chat. Now, as I say, they will most likely do a 25 basis point cut. Okay, from 450 to sorry, Nathan is just just distracting me here. So from the target rate is 475 to 5. They will do a cut from 475 to 4.5. Okay, so therefore it's a 25 base point cut. 97.5% of the market is already priced in for this. Yesterday we had 96.4. Soon as Trump got in, we got 1.3% above yesterday. So 97.5% of the market is expecting a cut in 12 hours and 27 minutes for the Fed. So this will be most likely the last cut of this year, in my opinion. Okay. Why? Because when Trump gets in power, as I was saying, the administration will do very costly. Okay. Yes, he wants to reduce taxes and for big corporations, so this can boost, as he said, boost the growth of the country. In a sense, that's correct. But in another sense, he will be spending more than $7 billion. This will cost USA more than $7 billion in the longer run. Okay, so when we look to the two sides of the coin, yes, one side is really good, the other one is not good. Okay, taxes will be lower, that's perfect, but unfortunately the US dollar will be stopped making $7 billion per year, sorry, for the longer run. Okay, even if we search here, Donald Trump will have $7 billion lost USA. There you go. So just take this off. More tariffs. Oh, sorry. More tariffs, less red tape. What Trump will mean for key global industries. So manufacturing and cars. That's not what I want. Sorry. I don't know where is that website anymore. But if I find it, we'll send on the Telegram. But it was pretty much very clear. They've done a pretty simple study, and that was showing that $7 billion over the 10 years that USA would be stopping making because Trump will reduce the taxes. That's not hard math to know, right? If you reduce tax, that's the only way that a country can make money, getting tax. And then you reduce that, you're losing money. So your revenue your revenue goes down. Okay. But now coming back to the Fed, not trying to extend myself here. Coming back to the Fed, we've seen right now 97% of the market pricing for 25 base points cut on tomorrow. All right. So higher. So basically, sorry, Nathan is just screaming at the back here, guys. Nathan, stop. You wanna come and say hi to everyone? No, he don't want to come say hi to everyone today, guys. He's probably busy. So as I was saying, most likely we will see and we will continue to see the Fed maintaining the rates at 4 to 4.5. Okay, 4 to 4.5. That would be the band that they will be maintaining. So higher rates generally lead to a stronger US dollar as they make US assets more attractive, as it make the US assets more attractive to foreign investors. So alternatively, if we see a focus on budget cuts from from Trump, that's going to change my whole perception. Okay, so if we see a focus on Trump looking to cut budget, the Fed might adopt a more dovish stance to stimulate growth. And in this session, in this section, we can understand that if we see the Fed adopting a more dovish stance, then it's really not going to be great for the US dollar. Okay. Satish says, I think Fed will be little hawkish or neutral in today's meeting. Well, actually, it is in 12 hours. That's a funny time for Australia. Let me have a look at the economic calendar very quick. What time is that going to be? Friday. It's going to be 6 a.m. Interesting. Long time I don't see the Fed at like 6 a.m. It was usually 4:30, it was usually midnight or something like that. So interesting to see that. Anyways, coming back here. So most likely we will continue to see the US dollar strengthen. Okay. If Satish says that I think Fed will be a little hawkish or neutral in today's meeting, I think they will be more towards neutral. Okay, more towards neutral to hawkish, because if you think about it, Fed being dovish at the moment, it's going to be really bad for the US dollar, and they can't leave that behind. And if we have a very hawkish, then it's not just what they need. Okay, they have been coming from a neutral to hawkish, so therefore we may continue to have neutral to hawkish. Okay, most likely. Now, that being said, all right, so for the Fed policy predictions, in my opinion, is we will continue to see a neutral to hawkish, and with a continuing to have, once Trump gets in power, a steady higher rates for longer. Okay, that would be the word, higher rates for longer, and potentially moving US dollar stronger. Okay, potentially moving US dollar stronger. So let's analyze some post-election portfolio rebalancing now. Okay. I do have some things to show you guys. So let me bring it up here. Where is my FinLogics? There we go. Chart. Oh, actually, before we go any further, that's the last topic of the day. Before we go any further, let me just come back here. Okay. So I've just posted some trades today. So if you come into latest ideas in FinLogics, okay, I'm going to send FinLogics link again on the web chat, on the chat. Sent on the chat. You can see that I have short GBP, short GBP AUD. Okay. I have as well short Euro NZD. And I have long GBP CAD. Oh, sorry, that was on 2 days ago. So let's have a look on how those trades are going. So this one I've entered because the Australian resilient economy, it's a bit hawkish Reserve Bank, as I was just talking to Satish. So the Reserve Bank of Australia has recently signaled a willingness to continue tightening rates if inflation remains above target. With Australia's economic resilience supporting these measures, this approach has bolstered the Australian dollar, drawing interest from global investors seeking yield, as it's completely different from UK economic signification and Lloyd's Bank of England. Okay, so if we look at it, it has been a pretty good bearish candle. We are halfway there on this trade. Now, for the short Euro NZD, has been exactly the same thing. There you go. Pretty good. We're nearly on target already. Okay, I've posted those trades today. Both of the trades are running green, are running profit. That's pretty good. Let's have a look on GBP CAD. Let's have a look on USD CHF as well. CAD. Oh, I have two GBP CAD. Sorry, there you go. So GBP CAD, I was long, okay, but I don't think I think we got stopped out on this trade. Yeah, we went on direction and then we got stopped out. This is why I got short on GBP AUD today, and then USD CHF short as well. We got stopped out because of US dollar was very strong. So in overall, we're still running in profit because that was 2% loss. So we are somewhere around 2% profit at the moment between those two trades, GBPAD and Euro NZD. But it's something that you don't need to take all the trades, right? You can come here, use this as an idea, use this as a confirmation for your trade, or something like that. But use your risk, use your own sort of measures, and you should be fine. Now, coming back to the charts, your NZD card was also doing good. Yeah, I think we got stopped out on NZD CAD. Let's have a look. Where is this? There you go. New Zealand dollar CAD. It's just a bit low, slow. CAD. There you go. Long time ago. Yeah, NZD CAD was take profit, right? We hit a take profit on this one because we started on here and our stop loss were on 84,123. So 84,123 right there on top here. So we hit a take profit on NZD CAD. So that was a good trade right there. 82. Oh, sorry. No, we didn't. Okay, so we're still trading high. Okay, so we still have some room to trade on New Zealand dollar CAD short. Interesting. All right, enough of trading. Let's have a look on charts now. So what I want to show everyone is, analyzing some post-election portfolio rebalancing. We saw gold going down, and this is showing to me that majority of the money is moving to US dollar. Okay, so most likely what we will see from now on is a swift switch from money that was in gold coming to US dollar, and money that was on US dollar staying on US dollar, or maybe going to bonds. Okay, so if we go into a lower time frame for hours, we saw that in the first few hours of the election, we were pretty much consolidating. And then once Trump got in power, then the news comes out, the market moved back around $150, around $130, $140. The market has dropped. So this is showing to me that yes, investors prefer to have US dollars on the portfolio than actually gold at the moment, because that's the time that they will be making really good money. Okay, so let's say USD JPY, for instance. We can see a potential continuation of this uptrend on USD JPY going all the way up to 170 now with Donald Trump in power. Okay. All the trade that I think it's really, really, how can I say, really worth to have a look at is euro dollar. Okay. I want to hear from you guys. What do you guys think about euro dollar? Okay. No one is trading euro dollar. Interesting. All right. So we saw euro dollar having a huge down move. Just waiting for a good pullback. Yeah, same here. I'm just waiting for a good pullback to continue to short, euro dollar. I do believe that if we break through this level, okay, that we haven't yet touched it, but if we break through this level, we will continue to see downtrend. Okay, we will continue to see some big downtrend. Then coming down to this level, long euro dollar is CRT, sorry, short euro dollar. Okay, good. Yeah, same here. I'm short euro dollar. Most likely we will see some correction around these levels. Let's go for 50-minute. Zoom out. Okay, perfect. Like that. Because we just need to understand that euro dollar continue to be on a downtrend, right? So most likely we'll see at least a 50% pullback. I'm looking at the 61 level. Okay, I'm looking at the 61 level. Why? Because if we go to the 50-minute, sorry, to the 5-minute, we can see that there is a little consolidation in that. And I do believe that we will get some profit taking. And from those profit takings, we will see some pullbacks. Okay, right here. Okay, so that's most likely what I think it's going to happen. Okay, but we need to check with the Fed and what the Fed will be doing today. Now, just last question. Satish has asked me. I have a question regarding GBP AUD trade because US dollar strength is not good for risk. It's not good for risk on currency like AUD and New Zealand dollar. Can you explain briefly? Yeah, for sure. So when the US dollar strengthens, it often reflects a risk of sentiment in the markets, but it means pretty much that investors are more risk averse. So like environments like so US dollar is a safe haven, like safe haven assets like the US dollar, they will become more attractive, while the risk on currencies like the Australian dollar, the New Zealand dollar, they will tend to weaken. Okay, so this is particularly relevant for the GBP AUD. So a stronger US dollar can directly pressures the Australian dollar. Okay, because Australian economy is sensitive to a global risk sentiment and commodity prices. So both of which can suffer from when the US dollar strength, right? So typically it will reduce the demand for the Australian dollar and they will make a weaker against other currencies like the pound. So in this scenario, if the pound is stable or gaining strength, the GBP AUD pair, it could more likely to rise against the Australian dollar. But in this scenario that we have a stronger RBA, we can continue to have more pressure on the pound that has been losing monetary policy, and the Australian dollar has been and the RBA, so the Reserve Bank of Australia, has been holding stead on the monetary policy. Okay, so that's what I'm looking at this moment. All right, so let's just do a briefly rundown of what we've seen on today. So reviewing election and a historical perspective on market reactions. I've just, things, different times, different reactions. Second is impact on the US dollar after Trump win and the key sectors and policies. I've mentioned it: energy, commodities, and manufacturing. Third is the Fed policy predictions post-election. What are the potential moves? And fourth, analyzing post-election portfolio rebalancing, where I think that the US dollar will continue to have some sort of strength in the coming month. All right. Okay, guys, thank you so much. Hope everyone have a beautiful weekend. And I see everyone on the next week. Hopefully I could help everyone today. Thank you, guys. Have a good one. See you all. Bye-bye.